G'day folks, welcome back to another update for gold and silver. Now both are showing some bearish short-term risks in terms of a bearish divergence. Silver's pretty much trending sideways and consolidating in the medium term. Gold has reached recent highs, almost a double top if you're on the daily. Before we get into the charts, make sure you hit that like and subscribe button to support the channel. Looking at the outlook, for the price movement as of today, January 29, gold is steady at 27.39 per ounce, following a significant sell-off influenced by China's DeepSeek AI model. Influencing factors: investors liquidated gold holdings to cover losses from a broader market downturn, especially in technology stocks. The upcoming US Federal Reserve meeting is in focus, with expectations of stable interest rates. Hints at future rate cuts by Fed Chair Jerome Powell could pressure Treasury yields and support gold prices. In terms of the outlook, economic uncertainty and inflation concerns under President Trump's second term suggest a strong year for gold. With silver, spot silver is eased by 0.8% to $29.97 per ounce. In terms of influencing factors, the metal faces challenges with demand forecasts, particularly in industrial applications. And in the outlook, despite current challenges, industrial demand for silver is expected to increase due to growth in solar photovoltaic demand, with prices anticipated to be between $28 and $40 per ounce. So first looking at gold, and again if you're new to the channel, these indicators we've got are attached in the description below for separate videos to reference after you watch this one to learn how to draw them on your own charting software. Now we will look at the long-term trends with the monthly, the weekly and the daily. So on the monthly, gold has been doing quite nicely. It has been above its moving averages since January 2023, although it dipped below the moving averages on the CCI in that period there around middle of 2023. Then it broke out again in November 2023 and has been bullish since, and still is bullish with a nice uptick, and is hitting this double top on the monthly as well. Now on the weekly, we do have this bearish divergence, and a bearish divergence where we've got lower highs on the CCI versus higher highs on the price. You'll notice there that even though the price is retraced, hit the minimum retrace level, and that minimum retrace is measured from that high Fibonacci down to that low, and that's at 23.38% minimum. We did have another bearish divergence back here, so you can see there I've marked it with that rectangle, and that would have been drawn with that high there back to that level there. Actually would have been that level there. It goes back to the recent low, and that was the 23.38% level. So it pulled back, stayed in that range for some weeks, and then it bounced out of there, and it had this secondary divergence. But at the moment, we've got this other longer term divergence still in play. So again, just be mindful of that. The price may still go up, so long as the CCI keeps dropping like it is at the moment, and the price remains high, we're going to consider that a bearish divergence. So at the moment, just be cautious. It looks like it's heading higher, and it may well do so, but the CCI is actually trending just below or just touching that lower end of that moving average range. So that's on the weekly. Now on the daily, I've also marked these resistance lines. You can see there it's hit this resistance at 27.90 twice, and it's currently sitting at this level here. Now I've got this bearish divergence still on the daily, and these divergences on different time frames are all independent. They're not related necessarily. So I've got another bearish divergence currently in play, lower highs on the CCI. And if you draw a Fibonacci, a trend line from that same level there, I won't draw it because it's got that resistance line. You can see there it's a double top, and that's still considered a bearish divergence with lower highs on the CCI. Now if this CCI breaks higher and goes higher than that point there, and the price does break higher as well, then we're going to invalidate this bearish divergence on the daily. So that's the daily. Then we jump to the intraday chart. So if you're trading on the intraday, 1 hour, 2 hour, 4 hour, etc., you take the trend in the direction of the higher time frame, in this case the daily. So here we've got the 1 hour chart, and this is the daily chart. So we go in the direction of the daily, so we go long only, we don't go short. But having said that, notice here on the 1 hour we've had a couple of bearish divergences, and each one of these broke down and hit this minimum target range. You can see that one there. And again, if I draw a Fibonacci for that little range there, back to that low, that's a 23.38% level. It bounced perfectly off that 38% level and rose higher. So it actually executed that bearish divergence quite nicely. So as soon as you see this CCI starting to rise, you know that's the generally the trend has changed and the divergence is invalidated. Now in this case, had the CCI remained lower than that low there, you would have had still a bearish divergence on this range as well. But because it broke higher, we had no bearish divergence. It's been invalidated, although that's completed, and the CCI continued to rise in line with the price. Now here at the moment, we've got we had probably another bearish divergence, lower highs on the CCI there versus higher highs there. And again, if I drew a Fibonacci between that range there, you can see there, I haven't drawn a target range for it, but you can see there it's hit that 23.38%, just below it, and it's bounced out of there. Now, that CCI, even though it's broken a higher than where it was previously, and the price has as well, theoretically it's still a bearish divergence. Now, this price can still rise. So long as this CCI remains low, we're going to consider a bearish movement. But at the moment, possibly, it's completed that bearish divergence, and it's now moving, the CCI is moving in line with the price. So basically, in terms of trading strategy, we go long. So when that breaks above, you could have gone long on that one as well, but you would have probably been stopped out on that candle there if you're trading on the daily. But if you're trading on the 1 hour or the intraday time frame, let's get rid of some of these. So let's say we're beginning on the 7th of January, this period here, you would have taken these long entries when the CCI broke above the moving average range. Let me just zoom in there. You would have taken that long entry there. That's in line with that bullish move on the daily. And if I draw a ruler, and this is on the hourly, so assume you close at the end of each bar or candle, you would have gone long there, and you would have closed it out when it broke into that moving average range at the bottom of that candle there. So that would have given you a 0.33% gain in 14 hours of trade. That would have been a false break, possibly, but notice here the price consolidated, so you may have held that because you may not have hit your stop loss. The CCI kept dropping. You do not go short because you want to go long in the direction of the daily. Then go long again there, and this would have been another potential. You probably could have remained open with that position there. In this case, that dropped lower, and it depends where your stop loss was. You might have been stopped out, but again, don't make it too tight. You can see there below those bottoms there. And then finally it did break up, and you would have been closed out on that one. Now this one probably didn't execute as well as it could have, but generally the CCI gives you a better entry and exit. So there, for example, you would have gone in long there, and you would have got out the bottom of that candle. Another long entry here. You would have gone in long there on that one, and you would have got out when it broke into the moving average range on that candle there. So again, small gains, and long there again, and you would have got out possibly with a break even or a small loss on that one. So basically, it's not a perfect strategy. No strategy is. It's all about getting little gains where you can and capitalizing on those. So at the moment, if I go to the current time frame, again, because of the daily's long, you'd still be going long. You would have gone long on that one, and you'd still be, actually, you might have closed it out right now with that gain there. So it's 0.6% gain in 15 hours of trade. That's how you basically trade it. So next we look at silver. Now silver has also been quite bullish in the last few months. Now notice here as well, it's broken into that moving average range, which is a weakening signal, or even though the price is well above its moving averages on the monthly chart. On the weekly, you can see there very clearly we had higher highs on the price and lower highs on the CCI, and that actually broke down and hit this 23-38% target range. So if we drew a Fibonacci between that high on the weekly down to that significant low there, actually would have been back to that level, it hit that 23-38% level and just bounced off that 38% quite nicely and it's currently in that range at the moment. Hasn't really made any strong move to the upside. But notice the CCI on the weekly is still bearish, so we're very likely going to see further downside on the weekly, at least on the weekly trend. On the daily, a bit closer, we had a couple of bearish divergences here. I won't go through those. You can see there hit the target. Another small scale bearish divergence there, hit that target, bounced just below it, then bounced. And since then, the CCI has been moving in line with the price. The highs and lows are pretty much in sync. And then more recently, you can see that it's been consolidating in this range off this minor support at 28.74. So pretty much a very neutral positioning at the moment on silver. Although, if you go back to the weekly daily, you can see there broken into the neutral positioning on the monthly, bearish on the weekly, and bearish on the daily. Now if we go to the intraday chart, again we only take short trades. So again, all on the hourly chart here, you can see there we've got I've highlighted a few divergence or bearish divergence. That one dropped. That was a bullish divergence. That was a double bottom, higher lows on the CCI. It bounced, hit our target there. Here we had a bearish divergence, hit its target. Got another bearish divergence here, dropped. And at the moment we've got no other divergence. But notice as well, in line with the daily bearish trend, you'd be going short once this breaks below the moving average of the price, but also the moving average of the CCI. You'd take a short entry. So that's the silver price movement at the moment. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.